Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Friday morning. Just moving the mic here, bear with me. All right, hope everyone's having a great Friday morning. We're talking about non-farm payroll Friday, not just any old Friday. We've got the average hourly earnings, a non-farm employment change, as well as the unemployment rate. Now that's not everything that we've got today, because as we go into the remainder of the morning, starting in about 14 minutes, we'll hear from FOMC Bowman, and this is one of four different FOMC events or speaking engagements that we're going to have to deal with today. Bowman, Goolsbee, Hammock, and Daly. And obviously in the wake of non-farm payroll, they'll have a lot to say. So while those four aren't necessarily, Bowman can be a little bit of a market mover. What we'll get is a little bit of insight on how this non-farm is going to factor into the rate decision that's coming up. So let's go to that, right? What's the measuring stick for whether or not we're going to have a rate cut? Well, this is really telling that Fed fund futures, based on that non-farm payroll. Again, why do we care about non-farm? Because the expectation of that number lands in the target rate probability, which is basically, is the Federal Reserve going to cut rates or not? That's why these matter, right? That's why these matter. And we haven't been able to cross over that 80% threshold at all. And this is the first time, I believe, that we are above that. I mean, we may have spent brief amounts of time, but I think the highest that I saw was 79. So here we are above that 80%. And why does that 80% matter? Because this is where largely this particular event would be considered now fully discounted. This is what we expect. The FOMC knows it. And so here's where it gets interesting. All right. If one of the four, or if all four FOMC speakers from this week go, whoa, this is not what we really wanted them to take away from today's non-farm, they'll talk this down. So where this number ends up, and this is the quarter point cut column, where this ends up by the close today will be very, very important. So we'll keep an eye on all that. But for right now, that non-farm has launched expectations for that quarter point right through that all-important 80% level. Well, what does that mean for equities? That means we should see more strength. We should see more of what we've already been seeing, which is strength. It doesn't mean that we're going to launch up and just make some sort of crazy move, but is there any reason to undo the bullishness that we've seen so far since mid-November? Is there any reason to be bearish at this point? Probably not. Window dressing is in effect. Federal Reserve is likely to cut in 12 days, another quarter point. So onward and upward, which has kind of been the message for well over a week now. If you take a look at the videos that I cut on Tuesdays and Fridays for the Simpler Trading YouTube channel, I think maybe 2 weeks ago, the whole narrative was onward and upward. All right, let's focus on the strength names, indices, sectors, stocks. Let's focus on buying the dip. Let's not try to find a stock that's been moving lower and bottom pick. Let's try to find things that are stronger, pull back, buy into the pullback, and enjoy the continuation. And that's really the plan. So there you go. This is basically the ES strength that we're seeing. Not a new high, but certainly no reason to be bearish. Here's the NQ. I'm particularly interested personally in the Dow this morning because we just built a long position in the XLI yesterday in the Sector Secrets Mastery. So when I look at my overall book of trades, what I have in that book of trades is a lot of exposure to financials, exposure to some insurance, exposure to Walmart, Amazon, Disney, and now XLI. So we have quite a few open trades as we go into this pretty early part of December and looking for more. In some ways, I would have loved to have seen Powell or non-farm payroll give us a little bit of a wick to the downside, a little bit of uncertainty that could have allowed us to buy some of the strength names that have been rallying, regardless of whether the rate cut on the December 18 meeting was a yes or a no. Some things are rallying anyways because they're pretty darn happy that we've already got 3/4 of a point worth of cuts. The full point wasn't a make or break. It sure does help. And we'll continue to look to the long side. A couple symbols that have been a little tricky have been energy. Energy has been a little quirky. And I've been just giving it a moment to sort itself out. And then financials as well. Financials has been a little bit quirky, and I've also been kind of letting it sort itself out as well. And while I do like both of these sectors, likely the next foray into energy would be via CVX. So if you want to put that on your watch list, Chevron is the name that we've been talking about for, frankly, for the better part of 1 or 2 months in terms of the best, that and Williams, the best looking stock. So we're not looking at things that most people are looking at. We're not just going to automatically go to the popular or the heaviest weighted alone. It's what has structure, and Chevron definitely does. Within financials, JP Morgan, Bank of America, both are on my radar. But it's not as if we don't have exposure to financials. We already do. So financials are not high on my list because we're already managing swing trades, overnight, longer term positions. Always open for more entry, but I'd like to get exposure to places that I don't already have exposure to. One would be KRE. Some of our members are trading things like TFC. The other would be looking at KRE, and the other would be IWM, RTY, IWM, the Russell. That's another place that I'd love to get some more bullish exposure to. The other one is jets. Jets or even transport. There are certain names within the airlines, and this is the number one sector right now. Major sectors, this is the number one. This is even outperforming XLY, XLC. It's outperforming the regional banks. It's really, really, really very strong right now. So we want to focus on strength, getting stronger, and that's where we're at. Okay, so as always, if you have any questions, feel free to ask. Where am I not looking? A lot of things are going to have some strength. I'm very hesitant with things within the XLK. Apple's been helping out a lot here, but I'm hesitant with that. Another place where I really don't want to be too bullish. Look what happened to SMH yesterday. This is where it's very dangerous to think that a breakout like what we saw on the 4th is necessarily going to follow through on the 5th. That was a down candle that closed around 248.31. It's only at 248.40. This is a laggard. And while there might be individual stocks that might be doing okay, this is not a sector that we want to focus a lot of attention on if we're looking at follow through into the end of the year. There are better places, and most of that is going to be XLC. Most of that is going to be XLY. This is your communications led by telecommunications. Disney, Netflix have been in fuego within the XLC. Amazon, Tesla, consumer discretionary has been, look at the sector itself. This is another place where I'd love to get long calls in this sector itself, XLY. All right, let's see, questions. By the way, if you're not, right now where we are within the year, this Q4, last trading month of the years, is very much about finding the trends, waiting for the pullbacks, not playing a lot of chop, certainly not playing downtrends, because think about the prime candidates for tax loss harvesting. If you want to take a loss and wipe something underperforming from your book, offset gains, that's this month too. So if something's weak, it's very likely to get weaker. So this is not the time for bottom picking. Maybe in Q1, but not quite yet. All right. So, if you're definitely struggling and say, hey, Rag, my watch list doesn't look anything like yours. I'm not looking at a number of swing trades that are open right now. And this is where I think it's super important to, here we go, to take a look at the book of trades. This is Thursday's recap to the members that I send out. So everybody knows, okay, Wells, financials, Amazon, Walmart, Disney, Lincoln, and then industrials was our newest entry. We bought the 140 calls yesterday, and I would love to see industrials wake up with that Dow, with that NFP, and see what we can get out of that. So this is where the exposure is. Look at how little, I have no semiconductors, not interested at all. Nothing in the XLK, not playing Apple, not playing Microsoft. And what's lacking from this book, as far as I'm concerned, is exposure to airlines, exposure to regional banks, potentially the Russell, and maybe Chevron. I'd love to get some of that in this book. It's not the Mag 7, right? The Mag 7 isn't really the Mag 7s, maybe the Mag 3, right? Maybe the Mag 4. It's not all 7 names are, Google's a laggard, NVIDIA's a laggard. Apple just broke out. It's following through. Meta's okay, but it's really Amazon, Tesla. Those are really been the strongest stocks for the most period of time relative to the other stocks in that Mag 7. So, don't make the Mag 7 the main focus unless it's the stocks in those two outperforming sectors that we talked about. All right, what else do we have here? All right, took a position in JP Morgan. Yeah, JP Morgan, Bank of America. Gang, the main reason that I'm not pushing for more financials positions is, frankly, I've got quite a few. And every one of these are alerts in the Sector Secrets Mastery. So I did get stopped out of the 50 strike call for December 20 on the XLF, which was a second go round, a second setup. It's independent. It's not an ad or any such other dumb thing. It was another legit setup on a pullback. But the journey to the target was untenable. The risk that I was willing to take to get to the target was untenable. And that's a conversation that everyone needs to have more often, because most often traders are willing to take 100% risk, 80% risk, 50% risk, and take a very little bit of profit off the table. That's not the way you grow an account. I can promise you that. So what we say is we bought it at a level. How much are we willing to risk? And if getting to the target just presents too much risk, got to cut the trade. We got to cut the trade. There'll be another opportunity. So for me, financials can't be at the top of the list for additional entries because I've already got quite a bit of exposure. But JP Morgan and Bank of America definitely would be two of the stocks that I like in the financials. So cool. Today's non-farm payroll should be a nice rising tide in the ES and in the YM, which case XLF should move higher, and everyone in the XLF, whether that be our Wells position or financials position, or even new positions that traders might have taken in things like JP Morgan or Bank of America or Citi. That's another good one. Hopefully everything enjoys that rising tide. All right, good stuff. Next up, can we take a look at SoFi? I don't use a 4-hour chart editor, but I'm happy to take a look at the stock. Overall uptrend on the daily. A little bit of volatility intraday, but here's what I would do with something like SoFi. Number one, it's a sub $20 stock. So this is the first thing I would recommend. If you're looking at a sub $20 stock, pull up SoFi, I would say on TradingView. So let's do that right now. So what I would do is pull up SOFI on TradingView. And the reason for that is TradingView has a great feature called the Visible Range Volume Profile. I'm a big fan. You could just maybe look at this quarter's visible range volume profile. And what I want is a pullback. So the pullback would look like a minor low to minor high. Sometimes a Darvis can help out with that assessment. And then I'm looking for a 50%. There's two levels that I'd be looking at for SoFi. This level here at about $14, and this level here, which is that 1482. Those are the two levels that I would look at on SoFi for a pullback buy. So this is actually not enough of a pullback. And here's why. I mean, is it at a support level? Oh gosh, yeah, you can see that right here. It's at a nice support level. Don't have much by way of volume, unfortunately, to really help out. But that's not really the problem here. For me, the resistance is the problem. So if I buy at something like $15 and I'm looking at resistance that could kick in, there at, so here's my support. It's a little dark, I know. Let's lighten that up a little bit. Okay. So there's my support. There's my resistance. Is moving that amount of points really going to be a decent risk reward? I mean, a position like that could be moved to break even if we hit the previous high, which, let's say we move from the lows of, call it 1560 to the highs of 1660. It's a $1 move in the stock. Probably not much of a meaningful move in the option unless you're playing the stock. And really the gem of an entry like that is a shallow pullback rather than a breakout buy. And then you're really looking for a breakout. This would position you nicely for that. However, if we pull back to 1482 or even 14, just retracing the steps to that high that we punched up to there at the end of November, that would be a scalable level. We'd likely have a reasonable amount of unrealized profit that we could realize, that we could pay ourselves with. And that's the way I would look at something like SoFi. Anytime we're looking at something under $20, I like to look at the visible range volume profile. What kind of volume, what kind of size, right, do we have at a particular level? Okay, next up is closed out Johnson & Johnson puts. I'm not really playing the short side, but that's a great place to look. Anything in healthcare, really, except for ISRG, has been great. Yeah, anything. So, yeah, wait for another red meets the gold. Right, that's it. I would continue to wait for rips to the upside, where ideally the red candle is in the gold zone. Yeah, I would, and this could be a nice continuation to the downside. Yeah. All right, GRS. Last show I mentioned the importance of risk management. What is your stop loss criteria? Do you add to your initial entry, dollar cost average? What is the stop loss? So yeah, that's a big topic. And if you want to learn more about the details of that, because it's not complicated, but there are details. Definitely check out what we're doing in the mastery. But just generally, my criteria is never max debit. We never add or dollar cost average. No, never. And a stop loss is usually based on a preset amount of risk to the account and to the option. All right, Netflix. Yeah, Netflix is a great one to keep an eye on. Netflix and Disney, and there's a number of things in the XLC. For those of you that haven't looked at the XLC lately, look, Meta is the least interesting. It had a great breakout, fantastic. Google, not interesting at all. Look at the trends in Netflix. Look at the trends in Disney. We talked about Take-Two on Friday's video, right? I said, hey, if you want to set up that's likely to keep moving, Take-Two. T. Look at those 5 names: Netflix, Disney, TMUS, Take-Two, T. That's the list in XLC. It's not Meta. It's not Google. It's not EA. It's not Charter. It's not Comcast, right? Find the things that are strong, wait for the pullback. And we actually still are in Disney. So, that's where putting my money where my mouth is. Would I like a setup in any one of the other 5? Sure, absolutely. I'd say the cost, the scalability is going to be a factor, but any one of those 5 where you see the green trend label, that's where we want to be. Harry, I have not been playing bonds at all. Thanks for your question on TLT. I've been not playing bonds at all. It at least now on the daily time frame with at least 5 green candles, I would say if you want to day trade it, that's a different conversation. That can change, that opinion can change every 15 or 20 minutes, right? But if we trade back down to the 119 handle on ZB, I would be okay with TLT calls. Now that we've got a nice string of green candles and we've got a little bit more certainty about December's rate cut, pull back buy, green meets the gray. Yeah, I have no problem with that. All right, Tesla. All right, we did a really great walkthrough in the session yesterday on Tesla, which is the difference between, buying in an area like this, right? In an area like this and buying at new highs. So my advice is always going to be, don't buy at new highs, right? Please don't do that. Please don't buy at new highs. Yes, you probably could. I'm going to use this wording very carefully, but yes, you probably could get away with it, but that's exactly what it is. If you want the best risk reward, always wait for a down candle. That's good, or a minor low. And that's another thing we talked about. So that's one thing I will say. Look for a minor low pattern or look for the green candle to meet the gray zone. I love the long side. Alan, love the long side on this daily time frame. Keep buying the dip. It's absolutely been an outperformer since the election. All right, CAVA. What do I think about CAVA? Of all the things I could do, this is probably not near the top of the list. Yeah, I mean, I'm sure it's a fine stock, but not even on the radar. Based on all the other things that I have on my radar, moving in a trend, heavily weighted in the broader averages. So I'm sure it's a fine stock. What do we need to do? What sector is it in? It's that sector outperforming. And if the basic tenet of my trading is really find the trend, follow the trend, this one lacks the trend. So to stay consistent in what I know works at scale, I've got to go trends first. And then after I've exhausted trending opportunities, I can look at non-trending opportunities. All right, gang. As always, Scoop, yeah, very few of my trades are in the central room because I'm not in that central room very often. All my trades go out in the Sector Secrets Mastery. That's for anybody wondering, yeah, Rog, where do these trades go out? We sent Amazon out in the central room, which is a monster winner. But no, not, I would say, less than 15% of my trades are sent out in the central room because I'm just there 2 hours for the entire week. I'm in the mastery for 14, 15 hours a week. So it's just a function of where I usually am broadcasting. All right, gang. As always, thank you so much for being here for Charts and Coffee. It should be an interesting day. Heads up for those FOMC members. And I'll see you in our next show. Okay. Be good to each other. Have a great weekend.